It's another business day here on Business Incorporated. 55 minutes of business going around that world of the economy. That's what we do. You're welcome, and this is what we have prepared for you today. The positive news for South Africa. GDP is up 0.6%. Nigeria and Egypt now have permanent invitee status at the G20. And with all that's happening from the US aid cuts and all, Arab leaders are meeting to seek alternative to that. You're welcome, I'm Ini John Mekwa. Let's do business starting from the global space. Oil prices continue their fall on Tuesday after U.S. President Donald Trump paused military aid to Ukraine, and as markets are braced for U.S. tariff on Canada and Mexico as well as China takes effect today. So we see for this afternoon, Brent has gone to $70 after it went down almost 1.5%, $70.55 for WTI. It's 1.32% in the red. $67.47 a barrel. Well, that pause to all U.S. military aid to Ukraine has been confirmed by the White House. Follows, of course, that clash that we saw in the Oval Office. But another factor that's driving the market is the growing distance between the White House and Ukraine as a sign of potential easing of the conflict that could lead to sanctions relief for Russia and more oil supply leading to the market. Also, there's that meeting from OPEC where there's talks of increasing supply, which obviously will also lead to a reduction in prices. So that we say those factors are responsible for this red numbers that we see today. And OPEC is saying that they might increase planned oil output to increase by 130,000 per day, and that would be the first since 2022. Now we go to the metal space. Gold prices edged down on Tuesday as market participants exercise caution, and they're bracing for the impact of that tariff on Canada, Mexico, and China, which begins today. So we see the numbers. Unlike what we had this time yesterday, we see gold is down 0.3%, $2,885.40. U.S. gold is also down 0.2%. at $2,895.40. Spot silver down 0.6% is what it has lost so far, $31.50. Platinum down, same 0.3%, $950.63. While palladium more than 1% in the red at $927.46 per ounce. And the factors are not far away from what's driving oil: the tariff and retaliatory tariffs and the impact on global commodities. Nigeria and the United Kingdom have reaffirmed their commitment to boost trade relations and economic growth through the implementation of Nigeria's national quality policy under the Standards Partnership Program Phase 2. This was issued in a statement from the British Deputy High Commission in Lagos on Monday. The program, which is being implemented by the British Standards Institution in collaboration with Nigeria's National Quality Council under the Office of the Secretary to the Government of the Federation. Launched in June 2024, the SPP Phase 2 aims to eliminate technical trade barriers, improve regulatory compliance, and promote export competitiveness between both nations. The initiative focuses on building a robust quality infrastructure to improve standardization, accreditation, conformity assessment, inspection, testing, and metrology services, all of which are essential to boosting trade capacity, attracting investment, and aligning with global standards. Also in Nigeria, the National Pension Commission, that's PENCOM, has inaugurated the Pension Industry Non-Interest Advisory Committee, and is to strengthen transparency, security, and compliance in non-interest pension products. Speaking at the inauguration in Abuja, the Director General of PENCOM, Omolara Oloworanran, emphasizes that the move aligns with the Commission's commitment to innovation, inclusivity, and Sustainability in Pension Administration. She explains that the initiative would ensure that non-interest pension schemes adhere to global best practices while catering to individuals seeking financial solutions that align with their ethical and religious beliefs. She also notes that the establishment of the advisory committee further highlights PENCOM's drive for financial inclusion, expanding the reach of non-interest pension products within the industry. A bit of corporate now. United Capital PLC has posted strong results for the 2024 financial year, with profit before tax rising 74% to 30.10 billion naira and profit after tax soaring 111% to $24.10 billion. At the same time, total assets saw a major boost, jumping 83% to 1.70 trillion naira, while shareholders' funds grew 47% to 133.50 billion naira. Also, the company is rewarding shareholders with a 33% increase in dividend payout to 14.4 billion naira, following its 2-for-1 bonus share issuance and an interim dividend of 90 kobo per share. Well, some good news around the oil and gas in Nigeria. Reactions are still trailing the latest reduction in the price of premium motor spirits, that's petrol, by the Nigerian National Petroleum Corporation Limited. According to the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rani, the reduction, which follows the recent price cut in the cost of commodity, is a welcome development for consumers who stand to win in terms of the ongoing price competition. While expressing optimism in further reduction in petrol prices in the coming months amidst competition with other neighboring countries, Mr. Rwani says he expects that the price will stabilize at 860 naira for a litre in April.
In a price war, nobody wins. The consumer wins in short run, then eventually the markets go back to where it is. Amongst the suppliers, they fight themselves, and somebody dies and the other one survives. But basically, at the end of the day, I think between now and June, until the price leadership is firmly established, and that is what has happened. Dangote is the price leader. He's the dominant player. He has over 90% of the supply. And he's determined to ensure, one, that the price and quality is guaranteed. And he's also determined to ensure that he has uniform pricing across the country. We're using all the resources he has. Therefore, he continues to be able to pass on the cost efficiencies to the market, and also having to support his position as a dominant player with other resources from other businesses he has. So I wouldn't want to be an opponent of a price leader in a market like this. So generally, between now and June, we'll see prices begin to decline. But after June, and things stabilize, depending on what happens in the global markets, oil and global currency markets, we might begin to see some stabilization.
Stability, I guess, will help planning and some certainty in that space. But now let's do an early stop at the markets and see what Aniti Edet has for us for intraday numbers. Aniti, good afternoon.
Good afternoon, Nini. It's still no breather for the stock market. Yesterday was down by 0.34%, but surprisingly, the market in terms of value, it was up by about more than 94 billion naira, 94.61 billion naira. But at intraday, let's take a look at how the number is trading. About 1 hour ago, first we saw that there was still a pullback. Year-to-date gain is still at 4.40%. It has reduced, and then we're in a new month. This is the second trading day, or the third trading day since the month of March began, and so far month to date is at a minus 0.3%. But if we have that number on the screen there, so we can take a look at how the markets are. There you have it there, 0.31% intraday. This was the last track that we had for the market about an hour ago, 107,000. It has been dropping that 107,000 points maybe before the close of today's trading session may not be able to hold, because we've seen it drop all the way from 108,000 down, down, and keep going down in the midst of earnings reports, which have been trickling into the market. The full year earnings report for 2024, most of the companies have been posting that, and then of course investors also reacting. But at the same time, we see that the market has been dropping. So not any sign of reprieve at the moment for the market. Even though we saw that brief gain sometime last week, but so far at intraday the market is still down 0.31%, as I mentioned there. For the Johannesburg Stock Exchange, it's also a negative more than 0.5% drop there, 87, and also it's almost dropping below 87 and dropping near the 86,000 point. For the other markets, for the EGX 30 and for the Nairobi Stock Exchange All-Share Index, it was a positive close for the Nairobi Stock Exchange All-Share Index, 0.35% in the green. And for the EGX 30 at intraday, down by about 0.16%. So, well, but this market index is almost on its way to the 31,000 points. But we'll find out how that market will close Tuesday's trading session later today. So now let's talk more about the equities market. And this time we're looking at the full year earnings result, which I mentioned earlier. First of all, we're going to take a look at the industrial giants, which, of course, many of the build sector cannot do without. First of all, we saw that Dangote Cement had released its full year earnings report. Revenue was stronger, even though the impact of the FX losses is still there, but revenues, on the side of revenues, was still in the very strong side. At the same time, Bua Cement, which is listed on the stock exchange, the three of them both listed on the stock exchange, Bua Cement, Lafarge, as well as Dangote Cement, all posting their results. And also we have it that Dangote Sugar Refinery has just released its report, as well as Seplat. So, but to talk more about the effects on the full year 2024 earnings, as well as the review of February and for what to expect in March, let's bring in Nabila Mohammed, financial market analyst with Chapel Hill Denham, for more details on that. Thank you for joining us, Nabila.
Thank you for having me.
Okay.
Good afternoon.
Okay. So, Nabila, I know that the market, some investors, I don't know, there's been dividend announcements by some listed companies, but first of all, my focus is on the top three cement giants, Bua Cement, Lafarge, and Dangote Cement. So what are your reactions, the market's reaction on your perspective?
I mean, if we're looking at their performance in terms of these cement players, we see that the likes of Lafarge and Dangote Cement did really do very well compared to Bua Cement. And if we even look at how much they eventually want to return to investors in terms of dividend, we see that Dangote Cement dividend yield is actually much compelling relative to that of its other peers. I mean, its payout is over 100% because the earnings per share for Dangote Cement was 29 naira, but they are paying a dividend or maintaining the dividend that they paid for 2023 at 13 naira for the period of 2024. So I mean, on a general scale, the performance was still good, but as you rightly said, the FX still had an impact, but it was not as much, and we still see that they posted profits, and they are also declaring dividend. That's across board. We have the likes of Bua Cement also paying a dividend of around 2 naira 5 kobo, the likes of Lafarge paying 1 naira 20 kobo. So yes, all in all, the results are relatively fair, and they are also still rewarding investors despite how hard the economy was for all players last year.
Okay, so for the interest of investors who are watching both in Nigeria and around the world, we know that Seplat, which is a dual-listed energy company, has also released its full year earnings. Now, tell us more about, give us details about this energy giant's latest results.
So, like you already said, the results came in late yesterday, and what we have seen is that, again, these results are very good. And in fact, the full impact of the MPNU deal is not really reflected yet, but we still see that it has consistently paid dividends. And the bonus shares that it has also announced is also something that would entice investors most definitely. Now, if we're now looking forward into the performance of the company, we expect that when that MPNU asset is fully added, and the opportunities that the assets being added would unlock for the entire combined entity, that would also mean much more compelling numbers in the quarters as well as in the years to come. So all in all, we like what we see in terms of the results and what they have churned out in terms of numbers and in terms of performance. And we are positive on surplus. We are also expecting that when the entire assets are eventually added, we will see more dividend payouts most likely, as well as more reward to investors in terms of bonus shares, just like we did in terms of the final dividend that was announced. I mean, we have a in total around 6.3 cents that was announced, total dividend for the final as well as the bonus. So all these are positive sentiments and positive flows that we've seen in terms of the results. So we'd expect some reaction, but what we noticed was that because of the fact that it is dual listed, there is that arbitrage opportunity that presents itself, and we've seen some pressure in terms of selling here in Nigeria. But regardless, the company is still fundamentally sound, and we expect them to churn out better numbers in the quarters to come because of the added assets as well as the potential that surplus standalone on its own has in terms of delivering value to stakeholders.
Okay, so last week Friday, because that was the last time I touched on the equities market, we saw that that was the last trading day, and as well as the last week was also the last trading week of February. But give us an overview of the month of February, which I know was in the positive terrain for a close.
So the performance of February for the equities market was quite positive. The month returned a positive gain of 3.18%, which is stronger than 1.53% in the month of January. And when we looked at the stocks that actually contributed to these gains, we see that top three stocks actually contributed around close to 70% of the gains that was recorded in the ASI, and those stocks are Dangote Cement, that accounted for over 50%. We had the likes of MTN as well as the likes of Petrol. I mean, we saw them post gains in terms of share price performance alone. For Dangote Cement, gained as much as over 20% in the month of February. So that really supported the positive return that we saw the ASI show in the month of February. And we understand that aside the fact that the stock price for Dangote Cement fell as low as 394. It presented a much more compelling entry point for investors, and that's why we saw it rally to as high as 480 levels that it currently is at right now. We also see the likes of MTN, aside the fact that for Q4 they posted a positive, the return to profit again in Q4, just like we did in Q3 stand alone. It just bodes well for investors that, okay, this company is actually beginning to turn things around, and it's likely we see them, should FX remain this stable, we may likely see them return to profit in 2025. Fresco, again, is an investment story. We know that they recently acquired oil palm in Ghana, Ghana Oil Palm Company in Ghana, and what we know is that it has improved their capacity. And we likely see that, of course, translate. In fact, we already saw it translate to much stronger numbers for Fresco, and that was what investors priced in. And we see that the stock price moved from 685 naira that it was previously to as high as 780 that it currently is at. So these are the three main stocks that contributed to the gains in February.
Quite interesting. Okay, so now we're in the month of March and marching on as far as the market is concerned. So when you take a look at all the factors in the macro economy, what will shape the market for the equities, especially within the first quarter, which will be ending by the end of this month?
So we're still expecting, if we're looking at the macro space now, not necessarily the market itself, we are still expecting that with FX stability, we should likely see the foreign investors return aggressively into the market, because if we're looking at from a valuation standpoint, the NGXSI is still relatively cheap with a much compelling dividend yield relative to its peers across the markets, other markets that we track and we look at. So aside that, if we're looking at the equities market itself, we still have the banks that are yet to, announce their results and also announce dividends that will follow. Even though it may look like there's some bit of profit taking currently, you agree with me that most of these banks, given that they've completed their some of the banks that have completed their capital raising and have also listed their new shares on the exchange, the investors would want to lock in profit and realize some of the gains, because it was just to give you a bit of context. Fidelity's offer price was what, around 9 naira, and you see the stock currently at 17, 18 naira. So it's just natural to see that investors would want to, realize some of these things and take profit. Aside that, that would be a bit watered down when they start to release their results and announce dividends, and because we may see some level of reduction in terms of the pressure to sell some of these stocks. Now, speaking for the consumers, we see that the story across board for based on the results that have been released is that Q4 is Q4 standalone, that's Q4 2024 report or standalone for these consumers looked very good because of the stability that we saw. So the story remains the same. If we see this FX stability maintained, of course, through the end of Q1 at least, we should see some of the investors take positions in some of these consumer names with the expectation that we are definitely going to return to profit, even if it's not in 25, but in the early part of 2026, even if this FX stability is maintained. So these are some of the things that I feel will shape the performance of the equity market in March. We still expect results, we still expect dividend announcements, and investors will definitely react to all these corporate disclosures or actions.
Okay, Nabila, thank you so much for your analysis. And of course, we're counting down to the market close, and we're hoping that the bulls will make a re-entry into the market. Thank you so much for your time on the program.
Thank you for having me.
Nabila Mohammed, financial market analyst with Chapel Hill Denham, giving us details on the markets for intraday and what to expect for the month of March. Okay, now over to the Middle East, where we see the United Arab Emirates, the two stocks there, Abu Dhabi and the Dubai index, both in the green, 0.54% and 0.19% for the Dubai and the Abu Dhabi index. But let's take a look at Saudi Arabia. Saudi Arabia, the Tadawul is down. That's a whopping 1.25% at intraday losses. This is no thanks to Saudi Arabia's pre-tax profit, which was down by about 12% to about $106.25 billion in 2024. This is the country's state-owned oil company, which is similar to our own Nigerian National Petroleum Corporation Limited, NNPCL, which is yet to list on the stock exchange after many years now. For the Qatari stock exchange, we see that at intraday, it was up by 0.07%, 10,470.94. We see the impact of some earnings reports coming into that market, just as we saw that for the two indexes on the United Arab Emirates. And let's jet out into the United States, where we see stock futures in the flat line, actually negative ahead of the opening bell at 2:30 Nigerian time. This is because that promise of the tariff by President Donald Trump has already come into effect, and many of the companies there are already beginning to react to that. A negative, that's the reaction there. The Dow Jones Industrial Average, 43,201. That's just about that number, but all in the red, almost the same margin for the Dow Jones and the S&P 500. Talking about the S&P 500, we see that the S&P 500, it's marking its worst day since December, and its year-to-date performance this year is so far at about 0.5%. So most of the markets in the US are actually not impressed, not happy about that tariff imposed on Canada, on Mexico, as well as on China. We'll be talking more about the Asian markets in just in a couple of seconds from now. But let's bring in our Washington correspondent, Myra Bird, for an overview of the close on Wall Street for Monday.
The U.S. stock market plummeted on Monday as the Dow Jones was down at 1.5%. The S&P 500 had its worst day of 2025, down at 1.7%, and the heavy tech Nasdaq was down at 2.6%. Many investors are watching to see what will be next, as the president has stated that the tariffs for Canada and Mexico are imminent, as there's no more room left for negotiations, and they can expect to see tariffs as early as Tuesday. This has investors concerned that we could see trouble in the U.S. stock market over the next few days. It is also clear there were major sell-offs at the end of the day on Monday after this announcement. Companies like NVIDIA dropped by more than 8%. We will continue to watch to see how the stock market will respond to the impending tariffs that are set to be in place this week.
Washington correspondent Mario Bird giving us details of the performance on Wall Street and also expecting what the market will turn out when it opens opening bell 2:30 Nigerian time later today. Okay, final stop is the Asian markets. As you can see there, Japan's Nikkei 225 index is the biggest loser here, led other stocks on the across the Asia Pacific, 1.20%, and slowly dropping below, almost nearing the 36,000 points, which it has left a couple of months ago, done and dusted, we thought, but actually that 36,000 points is about coming back. For the Kospi index, we see the likes of SK Hynix, which is a chip maker, it was down by 3.26%, while Samsung, which is also on the South Korea's stock market, the Kospi, that's what you call the market there, the Kospi index, all of this reacting to that to the tariff announcement by U.S. President Donald Trump, who has announced that who has brought the amount of tariffs on China has increased to about 10%. It had announced earlier sometime in January, but then another one coming into effect with effect from today, raising it to about 20%. So that impact is also felt for the Hang Seng index in Hong Kong, 0.28%. And talking about China, if we have that figure there, we see that the market is also, well, slightly up. And this is because the country has announced that they will be slapping a 15% retaliatory tariff on U.S. goods with effect from March the 10th, as well as restrict exports to 15 U.S. companies. Now, this the tariff largely cover U.S. agri products, including corn, soybeans, and which will be subject to new duties of 15% and 10%, respectively, according to the Finance Ministry's website. So now, at the same time, we know that China's Congress is expected to kick off an annual meeting on Wednesday. So this will be part of the discussions. So China seems to be unfazed with this. Of course, they've responded. Canada has also responded with about a 25% tariff on its own part to the United States. So we see a tariff tit for tat across the world there, and of course, investors reacting. The Nifty 50 still down from 23, 22, and barely standing in 22,000 points. Maybe before, if this trend continues, the market might go below that for the world's fifth biggest economy. So, that's it for the markets. Tariff, I don't know who the tariff benefits, if it's the host country or the country to which it's being imposed.
Yeah, I wonder. Well, President Trump says he's protecting the American economy. So I guess we should look at it from there, even though we've seen adverse effects, on the inflation, on the GDP and expectations and all of that. So even I think they're expecting their employment data and all. But we'll see. Time will tell us, and we'll see if there will be a pushback that might lead to a withdrawal of this trade.
But I think if you ask me, I would ask the question, does the world need protectionism? That's my question.
You need to get to the Oval Office for that question.
To the Oval Office? Well, with a new Trump gold visa, I guess I might as well take my chances.
I mean, $5 million is not so much for you, Anita.
Okay, I'll take a look at my purse if I can afford that.
All right, now let's take a break. When we come back, we'll head to the African scene, and of course, we'll still head to Berlin. That's on the other side of Business Incorporated. Please stay with us. Welcome back to watching Business Incorporated on Channels Television. Some African news now. South Africa's GDP has increased by 0.6% in the fourth quarter of 2024. This following a decrease of 0.1% in the third quarter of the year. Agriculture, forestry and fishing industry increased by 17.2%, contributing 0.4% to the positive GDP growth. Well, this was primarily owing to increased economic activities reported for field crops and animal products. The finance, real estate and business services industry was up 1.1%, contributing 0.3 of percentage point. Increased economic activities were reported for financial intermediation, real estate activities and other business services. The trade, catering and accommodation industry went up 1.4%, and that has contributed 0.2 of the percentage points. Increased economic activities were reported for wholesale trade, retail trade, and motor trade. The transport, storage, and communication industries increased by 1%, and that added 0.1 of the percentage point. Decreased economic activities were reported for land transportation and transport support services. The manufacturing industry increased by 0.6%, contributing 0.1 to the GDP. 6 of the 10 manufacturing divisions reported negative growth rates. The largest negative contribution was reported by basic iron and steel, non-ferrous metal products, and machinery division, as well as motor vehicles, parts and accessories, and other transport equipment division. And general government services also went down 0.5%, and this was because of decreased employment in national and provincial government and extra budgetary institutions. Electricity, gas, and water industry also went down by 1.4%, owing to decreases in electricity production as well as consumption. Well, we're still in South Africa, but away from the GDP now. We do have that story that the United Nations World Food Program is closing its Southern African office in the wake of President Trump's administration's aid cuts. In a statement, a spokesperson said that the office in Johannesburg will be closed, and WFP would consolidate its Southern and Eastern Africa operations into one regional office in Nairobi, Kenya. The spokesperson said that the UN Food Agency had launched a long-term plan to streamline its structure in 2023, but as the donor funding outlook becomes more constrained, they were being compelled to accelerate their efforts and close the shop earlier than planned. Now, the G20 finance ministers and central bank governors meeting have accepted Nigeria and Egypt as permanent invitees of the G20. Leaders also acknowledged the need for evidence and comprehensive assessment of risks to growth and inflation, and for discussion of macroeconomic policy and cooperation while respecting country-specific circumstances, emphasizing the importance of strengthening multilateral cooperation to address existing and emerging risks to the global economy, safeguarding financial stability. The G20 meetings were held in Cape Town, South Africa, under the theme Solidarity, Quality and Sustainability. A South Africa correspondent, Innocent Semusa, sent in this report.
South Africa's Minister of Finance, Enoch Godongwana, alongside South African Reserve Bank Governor Lesetja Kganyago, briefed members of the media on the outcomes of the first G20 finance ministers and central bank governors meeting in Cape Town. Minister Godongwana expressed disappointment over the lack of consensus for the communique. The minister revealed that U.S. Treasury Secretary Scott Bissett had confirmed his attendance but had to cancel due to last-minute commitments.
Let me just give an indication. From the USA, Scott Bissett, the Secretary Treasurer, sent a note verbal that he is coming. All of a sudden, the President of the United States called his first budget meeting, his first cabinet meeting yesterday. And therefore, Scott had, as a result, to attend the first meeting.
He also stressed that African representation remains a challenge in global discussions. Meanwhile, Sub-Governor Lesetja Kganyago addressed resolutions on managing economic uncertainty, and this is what I asked the governor.
My question is around global versus local challenges. And given the diverse economic landscape across the G20 nations, how is the G20 going to ensure that the global sustainable architecture that is spoken about is able to suit and adapt to the needs of emerging markets in Africa? And I'm asking this, Governor, because access to affordable funding remains an issue. Thank you.
The international financial architecture, and there is the issue of sustainable finance. Let's start with the international financial architecture. The central to the international financial architecture had been the creation of a global financial safety net. That global financial safety net has got at its center the International Monetary Fund. The second layer of that global financial safety net is the regional financing arrangements like Shanghai and the BRICS contingency reserve arrangements.
As leaders continues to navigate these uncertainties, the Minister of Finance here in South Africa, Enoch Godongwana, says that the inclusion of Nigeria and Egypt in the G20 as permanent attendees is a step in the right direction in making sure that the voices of the African continent is indeed heard. From Cape Town, South Africa, Innocent Samos, Channels Television News.
Now let's go to Ghana, where the Ministry of Communications, Digital Technology and Innovation is set to present the Ghana Innovation and Startup Bill to Parliament, and the aim is to formalize support for entrepreneurs and the country's innovation ecosystem. If passed, the bill could provide a structured legal framework to boost startups and attract investment, as well as create a more business-friendly environment for innovators. Let's talk about the expectations around this and a whole lot more with FL. FL Kofi is the Chief Executive Officer of Edel Technology Consulting and a Digital Transformation Advisor. Joins us from Accra, Ghana. FL, good afternoon and welcome to the program.
Good afternoon. How are you doing? And thank you for the invitation.
Good to have you on the program. So this bill, tell us about the expectations from it and the stage it is at in Ghana at this time.
Okay. So the startup bill, I know Nigeria startup bill has been happened in 2022. So the startup bill in Ghana has been about 4 years in the making. There's been a wide stakeholder engagement. But what has happened is, as you know, we've also had a government transition. And so that has slowed down the transition a little bit because we have been waiting for the new Minister of Communications to be appointed, and then from there has been engagement. We have many expectations of the startup bill as it is now. We're looking at, one of the big things is access to finance. So one of the proposals in the policy is the establishment of the Ghana Innovation and Startup Fund that will support startups. The other one is putting into law an agency within government that is supposed to support startups. And then, of course, we have simplified regulations. We've spent a lot of years, Ghana has done really well in simplifying government regulations, but I think the work needs to be done to go a little further into ensure startups can register businesses easy, tax and that sort of thing. Then the big thing for us now is tax incentives and conversations around tax. As you all know, the Ghana Revenue Authority has worked and pushed the non-resident giant tech companies like Amazon to tax them, right? So, and that's essentially is not a bad thing. Taxing non-resident companies that are making money out of Ghana is not a bad thing. The unintended consequence of that is a 21% tax that's being passed on to tech startups and startups that use cloud services. And so hopefully the bill will also have elements to support and help startups in occasions like this. The other big thing is intellectual property support. As you know, Africa is where intellectual property goes to die. And so there's a lot of work around ensuring that they can both register IP, but we can also enforce IP. Then, of course, there are conversations around capacity support and how government can support startups. Over to you.
Yeah, so I mean, that's a lot of expectation, and I mean, that's a norm. But we've also noticed that getting the law or bill through the legislature is one thing, but actually getting it to work and to be impactful is another. So that's why I would like to ask this question. How involved are those who be affected by this law eventually? How involved are they in this process so that we can know that they're part of it and they can actually implement it at the end of it?
No, I think the team that's working on the standard bill has done an amazing job. So there's been national, regional, and district level stakeholder engagement. Almost everyone that needs to be part of the discussion has been in the room to have the discussion and to have input. But even going forward, because of course we've transitioned government and we have a new minister, he has also asked that we do more stakeholder engagement. And so we have a timeline, we have a tentative timeline of July for the startup bill to go live. But between now and July, a lot more stakeholder engagement work is going to happen. And so one of the things I think that it's going to be, this Ghana startup bill is that's one of our biggest advantages across the continent, is the amount of stakeholder engagement that will be involved, that has been involved, that will be involved as we take it to Parliament.
It's good to hear you sound very, optimistic about all of this. But fintechs are taking over the world, starting from Africa. What's their place in this?
I'm sorry, you have to repeat the question. I didn't catch you.
Fintechs' involvement in this bill.
Right. Well, fintechs, the ministry, as per our engagement with the Ministry of Communications, Technology and Digital, there is a great focus on the fintech industry. So there's a lot of expectation on ensuring that fintechs will get the support that they need. So there's also a conversation about a fintech fund. So in the manifesto of the current government, there is a 50 million fintech innovation fund that is supposed to support fintechs. And so that's one there. There's also the regulation conversation, because with fintechs, it's regulation. And so that's one of the other big things of how fintechs are going to be supported and helped through this bill, is that regulation be simplified and regulation and actually that the fintechs be part of the regulation process with the Bank of Ghana, and so that they will be able to work effectively.
All right, Ethel, thank you so much for that. We hope to follow that story, see when it actually becomes law and what changes it will bring. Ethel Kofi is the Chief Executive Officer of Edel Technology Consulting, as well as a digital transformation advisor in Ghana. Thank you.
Thank you.
Now, Arab leaders are set to gather in Cairo. In fact, they're meeting today, I believe they're meeting as we speak, and they're to discuss alternatives to a plan from the United States President Donald Trump, in which the U.S. states would assume control of war-battered Gaza and displace its Palestinian population. The Arab League Summit on the territory's reconstruction comes a day after Prime Minister Benjamin Netanyahu again gave his backing to Trump's plan, calling it visionary and innovative. Palestinians, along with Arab world and many allies of Israel and the U.S., have condemned Trump's proposal, rejecting any efforts to expel Gazans. The U.S. estimates have put the cost of Gaza's reconstruction at more than $53 billion amid the devastating war triggered by Hamas terrorist group that was brutal starting in October 2023, and the onslaught on Israel, as well as Arab foreign minister, are meeting in Egypt's capital for a closed-door preparatory session that's centered on that. And still in Egypt, Egypt and the European Commission have signed a €90 million soft funding agreement that's to enhance food security. And the Egyptian Ministry of International Cooperation revealed this, saying that the funding provided by the European Investment Bank aims to improve Egypt's grain storage and logistics infrastructure. The initiative is part of a broader food resilience project, which also receives support from the European Union as well as the World Bank. The Ministry of Petroleum and Mineral Resources in Egypt has announced the launch of new investment opportunities to enhance crude oil and natural gas production as part of its strategy to bolster exploration and production while advancing sustainability in the energy sector. The ministry offers 7 undeveloped fields in the Mediterranean and 6 exploration concessions in the Gulf of Suez and the Western Desert. These offerings, accessible through the Egypt Upstream Gateway, will remain open for bidding until May 4, and EUG is a digital platform that promotes Egypt's oil and gas opportunities by providing easy digital access to advanced data visualization and technology. Let's head to outside the continent now, Berlin to be specific, where exploratory talks for coalition negotiations between the Conservatives and Social Democrats are underway in Germany. And it's just a week after those elections that we talked about. The stakes couldn't be higher, with Europe's biggest economy now stuck in recession and the continent facing calls to raise defense spending. Let's find out, perhaps Chiponda has heard what the government, or which way the government would choose to go, and to give us the gist. Hi, Chip, good afternoon. So where are the talks now? A whole lot happening in EU at this time. The threat of division in between the blocs, the threats from President Donald Trump, the one about the peace talks, which it seems EU is not being taken into consideration. So a whole lot happening. So where are the talks now?
Yeah, thanks, Ini, for having me, and good afternoon to you as well. There is a lot going on, like you just mentioned there, and the Conservatives, that is the CDU, and their Bavarian sister party, the CSU, are actually trying to reach an agreement on defense spending with the Social Democrats, the SPD. And this has, of course, become even more apparent now that the US president has announced that his country is pausing all military aid to Ukraine. Now, the German Conservatives would like to get an agreement on defense spending even before the new Bundestag, the new parliament, convenes for the first time towards the end of this month. And the rush to do that isn't just a matter of urgency regarding the war in Ukraine. It's also because Germany's potential new government, which is expected to be a coalition of the Conservatives and the Social Democrats, will struggle to make major reforms. Now, for instance, they will need the support of either the far right or the far left to change the constitution, which severely limits government borrowing. So the political future of Germany is still uncertain, Ini.
So what are the sticky points in all of this?
Yeah, there are quite a few of them for the Conservatives and the Social Democrats, because they occupy very different parts of the political spectrum, and they have a long list of issues to deal with. And those include spending, social welfare, taxes, immigration policy, military aid to Ukraine, climate policy. And the Conservatives and Social Democrats will struggle to agree on all of those issues. Right now, the Social Democrats are reeling from their worst results in a federal election. Now, while they have been traditionally seen as the Workers' Party, they have lost much of that support to the other parties. Now, being part of the government will be an opportunity for the Social Democrats to reposition themselves to voters. So they are expected to take an even tougher stance during coalition negotiations. And until a new government is formed here in Germany, it will be hard for the country to play a major role on the international stage, where there's a lot going on, like you just said, Ini.
Yeah, a whole lot going on. And I mean, you need to take care of home first before you can contribute to that. But let's turn to the markets now and see what are investors doing, how the stocks trading.
Well, today is, of course, a very different story on European markets, and shares here have joined the global market sell-off after U.S. tariffs on Canada, Mexico, and China took effect. And, of course, here in Europe, there are concerns that the continent will be the next target of Trump's tariffs. Now, the Pan-European Stock 600 is actually down more than 1.4% after the record high of Monday's trading session. Now, the U.S. president has talked about imposing a 25% tariffs on cars and other EU to exports to the US. And shares of European car makers are leading the losses today, declining between 2 and 5%. But aerospace and defense stocks are backing today's downward trend, and they are trading higher, of course, still. And that is, of course, after the European Commission President Ursula von der Leyen proposed a new fund that could mobilize nearly 800 billion euros for investments in defense in the EU. And of course, that is coming after that announcement by Trump that his country is pausing all military aid to Ukraine until they can reach a deal on those resources in that country.
Yeah, well, I guess we still have one sector thriving. That's the defense, in spite of all of this. Chip, thank you so much, and we hope to talk to you tomorrow.
Thanks, Ini.
All right, let's find out. The crypto space is getting bit from all sides. Ladi, I know you guys have a meeting with President Donald Trump on Friday, yes. So I was hoping that will
maybe a build-up of green.
Yes,
up to then,
but no. I mean, it's 83.
Yes, 83,000. Yeah, from the big jump we saw Sunday, that has been wiped out almost at this point. Maybe it's called the red you're wearing, but who knows? At this point.
I wish I had such power.
It's a tariff nightmares right now. We see the Bitcoin, Ethereum that's hit 11% down, BNB, XLM, all down at this point. But we see Pi in the green there. To some top stories now, we see former Brazilian footballer Ronaldinho has launched a new cryptocurrency. I guess the meme coins are back. It's called Star 10, and it's trading right now. We also see tariff fears weighing on the markets at this point. Then the SEC, they've agreed to drop a lawsuit against Kraken, and that's in principle right now. So much playing out in the market. Now let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Good afternoon, Larry. Good afternoon.
Good afternoon, Rume. So we're seeing, your background is not as red as I expected, but right now it's all about tariffs. It seems crypto investors don't want to hear tariffs at this point.
Exactly, but I think that is just a cover-up for the bigger picture. What is going on is that the ETFs are not what they actually tend to be. The ETFs volume that are coming, a lot of them are actually being used as a way to make money with arbitrage, So, but the media usually report it like, oh, the ETFs are bringing a lot of volume in. Really, the organic volume are not enough to be able to push us to where we are supposed to be in the industry. But nobody's talking about that. But a couple of us are doing our research deep down the rabbit hole. You can see that BlackRock and a couple of others are removing their funds from the ETF. Maybe they made profit, So, but the market will always look for a story to jump on, and the tariff is part of them. Then also, one of the stories that really shocked me was the Sunday where Donald Trump talked about the crypto strategic reserve, a particular account, actually 50x, some huge amounts of dollars long in the market. That means someone knows something that we all don't know. So it's crazy now since Donald Trump comes in. You will just see how the market volatility has really increased, especially from the crypto angle. A lot of persons are using the shortest opportunity to make money, and also a lot of people are also losing money. I can imagine that person actually long 50x, what they will be feeling right now. So in the short period of time, the market gained $8,000. In a short period of time, it lost more than that at some point. So it's quite crazy. Altcoins have been destroyed. So most of the altcoins that have been in existence in the last 5, 6, 7 months were about 85, 90% down their initial value.
Yeah, quite interesting. And I don't know if you're a fan of football, Rumi, but the snake bite king, Ronaldinho, has launched a coin. I don't know if we call it a meme coin at this point, but I know how you hate the meme coins.
Exactly. Meme coins usually are for... I'm a football fan. I like Ronaldinho. He's one of my favorite all-time players. But meme coins are in a way to make the industry look like a joke. And I really don't like everybody coming with them. It's more or less looking like since Gary Gensler left as the former SEC chair, will now have proliferation of all kinds of meme coin, all kinds of things happening in the space. So if you ask me, at some point, I was telling someone yesterday, bring back Gary Gensler, bring back Gary Gensler, hashtag bring back Gary Gensler, so that we can have some sanity. The US president launching a meme coin, the Argentina president bringing up a meme coin as well. The US president wife also in the meme coin. That's a mess, if you ask me. So bring back Gary Gensler.
All right. Thank you so much, Rome. Good way to anchor it there. Financial market analyst.
Thank you very much, Ladi.
So there you have it. At some point, they were praying for Gary Gensler to leave, and now he's left, and some are praying for him to come back.
I guess you don't know what you have until you lose it.
Exactly.
But my meme coin is going to be out real soon.
Any meme coin? We'll see how that plays out.
All right, so that's it on the program. Thank you so much for being a part of Business Incorporated. Today, another episode comes your way tomorrow, starting from our Business Morning at 10 a.m. and then 1 p.m. for Business Incorporated. But do remember, you can go to our YouTube channel and watch the programs anytime and how many times that you want. I'll see you tomorrow. Bye-bye.